It is New York time, February 7th, 2026. History will remember this day not for what was celebrated, but for what was slaughtered. If you turn on CNBC right now, you see confetti, you see the headlines screaming, "In victory, Dow Jones hits 50,000. You see the floor of the New York Stock Exchange erupting in cheers as Nvidia surges another 7%. But if you look away from the party, if you look into the dark alleys of the crypto markets, you see a crime scene. While Wall Street popped champagne, $2.1 billion of crypto wealth was executed, wiped out, gone in a violent synchronized liquidation cascade that sent Bitcoin plummeting 15%. They want you to believe these two events are unconnected, but I am here to tell you that is a lie. Here is the truth they are hiding. Donald Trump officially nominated Kevin Warsh as Fed chair on January 30th. That was the lure. The algorithms read Trump nominee and bought the dip. Retail investors thought the money printer was coming back. But 48 hours ago, something changed. A private memo from the transition team was leaked to the bond market. It wasn't about growth, it was about control. The smart money saw the details of Warsh's shadow mandate to execute the most aggressive quantitative tightening since Paul Volcker to crush the AI-driven inflation. While you were buying the January 30th headline, the institutions were preparing for the February 5th reality. The crash you see in Bitcoin today, that isn't panic, that is the sound of insiders rushing for the exits because they read the memo 48 hours before you did. While you were distracted by the flashing lights of Dow 50K, the liquidity switch was flipped. And the most terrifying part, this $2.1 billion wipeout is just the opening ceremony. If you are holding Bitcoin, or tech stocks, or even real estate, you are standing on a rock that is being pulled by the US government. In the next 40 minutes, I am going to deconstruct the Warsh Doctrine. I will show you why gold hitting $4,960 is the only truth signal in a sea of noise. Welcome to the liquidity trap. Before we go further, you need to understand who is actually pulling the strings. The media tells you Kevin Warsh is Trump's guy. They show you photos of them shaking hands at Mar-a-Lago. This is theater. Kevin Warsh is not a populist. He is the ultimate insider. He was the youngest governor in Federal Reserve history. He was the bridge between Wall Street and Washington during the 2008 financial crisis. While everyone is focused on his relationship with Trump, nobody is reading his actual academic papers. I have read them, and they are terrifying. Warsh belongs to a school of thought called financial repression. He believes that when national debt becomes unsustainable, like the $36 trillion we have today, the only way out is not to grow the economy, but to repress the cost of capital. In his leaked private speeches to the group of 30, he didn't talk about free markets. He talked about macro-prudential dominance. That is fancy banker language for total control over where money flows. He has explicitly stated that Bitcoin creates a leakage in the monetary transmission mechanism. Think about that word, leakage. To a central banker, your financial freedom is a leak. It is a bug in their system, and Warsh's job is to patch that bug. He is not going to ban Bitcoin publicly. That would be too messy. Instead, he is going to use the banking system to choke it. He is the architect of what I call Operation Choke Point 2. This implies a strategy where banks are quietly told that holding crypto assets carries a 100% capital risk weight. It makes it mathematically impossible for institutions to hold Bitcoin without going bankrupt. So, when you see the price crash today, do not think it is market forces. It is the banking sector pricing in the Warsh Doctrine. To understand why your portfolio is bleeding red today, you must fundamentally change your operating system. You must stop thinking like a trader looking at support and resistance lines. You must start thinking like an emperor looking at his dominion. Throughout history, whenever a sovereign state feels threatened by a parallel currency system it cannot fully control, or when it desperately needs to fill a black hole of debt, it initiates a specific, repeatable algorithm. I call this the sovereign confiscation cycle. This is not a conspiracy theory, it is a governance model. It was used by the Roman Empire, the French monarchy, and now the modern Federal Reserve under Kevin Warsh. This cycle always consists of 5 distinct stages. And the terror you are feeling right now, that is simply the physiological reaction to being trapped in the late phases of stage 3. Let us dissect this machine gear by gear so you can see exactly how you were herded into this slaughterhouse. Stage 1 is the lure. This is the phase of deceptive tolerance. You might ask yourself, if the government hates Bitcoin so much, why didn't they ban it in 2015? Why did they let it run to $100,000? Was it because they believe in innovation? No, they allow it to grow because they needed it. Remember the year 2020. Remember the $8 trillion printed out of thin air to save the economy. That money had to go somewhere. If that ocean of liquidity had poured directly into the consumer market, buying bread and gas, we would have seen hyperinflation that toppled the government. Instead, they needed a sponge. They needed a speculative asset class to absorb that excess liquidity, to trap that inflation in a digital box away from the real economy, Bitcoin, stocks, NFTs. These were not avenues of freedom. They were containment vessels. They allowed you to feel rich on paper, while they debased the currency in reality. Then came stage 2, the maze of ambiguity. This is the phase where they refuse to give clear regulations. They create a gray zone. One day crypto is a commodity, the next it is a security. This is where the Trump trade played its part. The hope of deregulation, the promise of a crypto-friendly president, it kept you compliant, it kept you invested. It trapped the retail investors and the risk-takers in a legal minefield, watching you build a house, knowing they held the deed to the land. And now, with the nomination of Kevin Warsh, we have officially arrived at stage 3, the liquidity squeeze. This is where we are right now. This is the cause of the $2.1 billion crash you woke up to. Look at the mechanism. The Federal Reserve is no longer printing money. Under Warsh's new mandate, they are extracting it. The leaked memo I told you about, it outlined a plan to drain the global dollar supply to crush AI-driven inflation. Why does this matter? Because when liquidity dries up, the first things that must be sold are not the things you want to sell, but the things you can sell. The institutions, the hedge funds, the leveraged speculators who bought the Trump pump rumor, they are currently suffocating. They are facing margin calls on their traditional debts. To satisfy the demands of the fiat system, they are forced to sell their hard assets. They are forced to dump their Bitcoin. The crash of the last 48 hours has nothing to do with the fundamentals of Bitcoin. It is a forced liquidation event. The state is tightening the noose around the neck of the economy, knowing that to breathe, you will cough up your assets. They are driving the price down artificially by removing the water from the pool, leaving the fish gasping on the concrete. This is the trap. They encouraged you to buy high during the lure, and now Kevin Warsh is forcing you to sell low during the squeeze. They are clearing the board. They are shaking out the weak hands. But why? Why destroy the price now? Because they cannot introduce the new system until the old alternatives are broken. If you think stage 3 is painful, you are not prepared for what comes next. Let us pause the emotion for a moment and look at the cold, hard math. We need to ask the uncomfortable question, why is this sovereign confiscation cycle inevitable? Why can't they just let us trade crypto in peace? The answer is terrifyingly simple, because the United States is bankrupt. Look at the debt clock, $36 trillion, but that is just the headline number. When you add up all the unfunded liabilities like Social Security and Medicare, the real number is over $200 trillion. We have officially crossed the mathematical event horizon. For the first time in history, the interest payments on the US national debt have exceeded the defense budget. Think about what that means. The US government is now spending more to pay interest to bondholders than it spends to defend the nation. This is a death spiral, and when a nation falls into this spiral, there are only 3 ways out. The first way is default. You simply walk onto the global stage and tell the world you are not paying, but that would trigger a global collapse that makes 1929 look like a picnic. They won't do that. The second way is hyperinflation. You print money until the debt is worthless, but that means a loaf of bread costs $50 and the people revolt in the streets. They are terrified of that. So that leaves only one path, the path they have chosen: financial repression. This is a fancy term for a simple cage. To keep the system running, they need to force pension funds, banks, and you to buy their government debt, even though it pays a negative real rate. But they have a massive problem. You found an exit. You found an alternative. You found Bitcoin. You found gold. Think about it. If you have the choice to hold an asset that appreciates 50% a year, why in the world would you buy a government bond that yields 4% when inflation is eating 6% of your purchasing power? You wouldn't. No rational person would. And that is exactly why this liquidity squeeze is happening. Bitcoin is competing with government bonds for the same pool of liquidity. Every dollar you put into Bitcoin is a dollar that is not buying US debt. Kevin Warsh understands this better than anyone. He knows that to save the bond market, he must burn the lifeboats. The crash you are seeing today is the repricing of your freedom. They are actively making it too expensive, too volatile, and too scary for you to leave the dollar system. They need your liquidity to fill their black hole, and they will take it one way or another. History does not repeat itself, but it rhymes, and right now, the rhythm is deafening. If you believe that Bitcoin is safe simply because it is decentralized, you are missing the most critical lesson of the last 2,000 years. That lesson is simple. When a sovereign state faces an existential threat to its currency, it does not negotiate with you, it confiscates from you. We are currently watching a three-part tragedy that we have seen play out before. Let me take you back to the year 274 AD, the Roman Empire. The currency had been debased by corrupt emperors to pay for endless wars, and the silver content had dropped to almost zero. The people weren't stupid. They realized their money was worthless, so they started using a parallel currency. They rejected the state's money. So what did Emperor Aurelian do? Did he compete? No. He declared war. He initiated a massive confiscation of the people's assets to reset the system. And when the people revolted on the Callian Hill, 7,000 of them were slaughtered. The state will kill to protect its monopoly on money. That was the first time. Now, fast forward to the Great Depression, the second time. By 1933, the US dollar was collapsing and people were hoarding gold to survive. So, President Roosevelt signed Executive Order 6102. It didn't matter that gold was private property. It didn't matter that holding it was your constitutional right. The government forced every single citizen to turn in their gold for $20 an ounce. And the moment they had collected it all, they revalued it to $35. In the blink of an eye, the US government stole 70% of the nation's wealth. They didn't need to break into your house with guns. They just changed the rules with a pen. And that brings us to today, the third time, the digital confiscation. This is exactly what Kevin Warsh is preparing for. Think back to the FTX collapse in 2022. Everyone called it a fraud. I call it a stress test. It was a live drill to see if the system could handle an $8 billion wipeout without triggering social unrest. The result was silence. The result was compliance. The test was successful, and the green light was given. So look at the calendar. Why is Warsh crashing the market right now? Why is he draining liquidity in February 2026? Because later this year, the Federal Reserve is scheduled to launch the digital dollar, the CBDC. This isn't just new money, this is a Panopticon. It is programmable money that can track every cent you spend, tax every transaction in real time, and even expire if you don't spend it fast enough. But for this digital dollar to succeed, they must eliminate the competition. They must weld the escape hatch shut. Bitcoin is that escape hatch. They can't ban the math. They know that, but they can make it impossible for you to use it. They are building two completely different worlds. In the first world, you have the elite, the BlackRocks, the Fidelities, the sovereign wealth funds. They will be allowed to hold Bitcoin as a high-value collateral asset locked away in deep cold storage. But then, there is the second world. That is where you live, the retail investor. You will be forced into the CBDC system. By crushing the price right now, Kevin Warsh is ensuring that when the new system launches, you are too broken, too scared, and too poor to resist. They are buying your Bitcoin for pennies on the dollar today, just like they bought the gold in 1933. This is the endgame. The invisible war is not being fought with tanks anymore. It is being fought with liquidity. And right now you are losing. I want to show you something that should keep you up at night. Most people talk about central bank digital currencies as if they are just a theory, but I am holding the actual white paper released by the Federal Reserve's Boston branch, Project Hamilton. I have read the code, and what is hidden in the technical footnotes is a dystopian nightmare. Let me explain what is in there. First, there is a feature called programmable expiration. This allows the government to set a time limit on your money. Imagine getting your salary on Friday, but if you don't spend it by Sunday night, it literally disappears from your wallet. Why would they do this? To force you to spend, to stop you from saving, to stop you from building wealth outside of their system. Then there is conditional usage. This means your money can be programmed to work only at specific stores or for specific items. Imagine trying to buy a flight ticket, but your transaction is declined because your carbon footprint score is too high this month. This is not science fiction. This code is already written. It is sitting on a server right now. And this brings us to the connection with Bitcoin. They cannot implement this system if you have an alternative. If you can simply opt out and use Bitcoin instead, the entire control grid fails. That is why the crash you are seeing today is directly linked to the digital dollar coming tomorrow. They must destroy your confidence in crypto right now. They need you to be scared. They are manufacturing the problem, which is this crash, just so they can sell you the solution, which is their digital cage. They will market it as safe. They will tell you to look at Bitcoin and say, see, it drops 20% in a day. It is too dangerous. Use the Fed coin. It is stable. We are moving from a society where money is private property to a society where money is a government coupon that can be revoked at any time. This is what Kevin Warsh is building, and the liquidation of your portfolio today is just the foundation cost of this new prison. So the question remains, in a rigged game where the state controls the board, the dice, and the rules, how do you win? The answer is uncomfortable. You don't win by playing their game. You win by becoming a ghost within it. You must stop listening to the influencers telling you to have diamond hands. Diamond hands is a psychological operation designed to turn you into a bag holder. It is a slogan created by the institutions to make sure you never sell so they can exit at the top. In the era of the sovereign confiscation cycle, the martyr dies broke. The only survivor is the liquidity sniper. The liquidity sniper does not hold assets out of ideology. He holds them out of necessity. He understands that we are entering stage 4, the great filter. To survive the Warsh Doctrine, you must understand the difference between a ledger asset and a bearer asset. A ledger asset is a promise. It is the money in your bank account. It is the Bitcoin ETF in your brokerage account. It is the stock that BlackRock holds on your behalf. These assets exist only by the permission of the state. When the switch is flipped, they can be frozen, seized, or revalued. A bearer asset is truth. It is physical gold in a safe that only you can open. It is Bitcoin held on a hardware wallet where only you know the seed phrase. It is energy. It is land. It is mathematics. Kevin Warsh can print dollars. He can manipulate interest rates, but he cannot print the private key to a wallet that exists only in your memory. This is your only shield. But timing is everything. Right now, in the middle of this crash, the majority of people are paralyzed by fear. They are watching their net worth evaporate and praying for a bounce. Do not pray, prepare. The $2.1 billion wipeout was the signal. The institutions have cleared the deck. They are now sitting on cash, waiting for the final capitulation. You need to do the same. We are approaching the window of maximum opportunity. As we transition from the liquidity squeeze to the digital panopticon, there will be a brief moment where real assets are priced in fake money at a discount we haven't seen in a decade. That is when you strike, not when the crowd is cheering, but when the crowd is silent. I cannot tell you exactly when to buy. I cannot give you financial advice, but I can tell you this. The window is closing. The infrastructure for the CBDC is being laid as we speak. Once those gates close, once the on-ramps and off-ramps to the crypto world are chalked off by regulation, it will be too late to secure your lifeboat. You have maybe 6 months, maybe less. The choice you make in 2026 will define your family's wealth for the next generation. Will you be the victim who trusted the system, or will you be the sovereign individual who prepared for the collapse? If you want to understand the signals as they happen, if you want to know when the institutions are secretly re-entering the market, make sure you are subscribed. I will be tracking the Warsh Doctrine every single week. I will show you the data they are trying to hide. The storm is here. Don't be the liquidity, be the sniper. I'll see you on the other side.